Hello everyone, Giuseppe Basile here, also known as the Fibs Talker. This is my video for the weekly review of tomorrow, October 27, 2015 for next week. I've been missing for a few weeks. I was off on holiday, away from the markets, and now I'm slowly coming back. I'll have another week of holidays next week, but I wanted to leave you with an analysis. Before I get into that, let me share very quickly my webinars I have on FX Street. If you join me on FX Street, you will enjoy some of the best webinars in the world of Forex. And in my webinars, open and premium webinars, I focus on new uses of Fibonacci, the psychology of the market, basic and advanced risk management. I also focus, of course, on my main edge, which is identifying the effects of modern algorithms in the market, especially high volume market. I really talk a lot about a lot of things, trading objectives, how we reach trading objectives through money management, as well as my new 7 pillars of trading success, which now include trading as a business, the psychology of the market, along with the traditional elements like the psychology of the trader, the method and timing, the risk management, money management. The other topics as well, I focus on why you should not choose the techie analysis, traditional techie analysis, what you have to do to trade like the elite 5%, the smart money, and I focus a lot on the psychology of the trader, which really makes the difference to become profitable and then consistent in trading. I also will focus more and more at the end of this year and beginning of next year on trading systems, how to create and define a good trading system, and I will also present some trading system that works. So I hope this makes you interested. So let's dive into the market here. We start from the euro dollar. The euro dollar has been going laterally after violating the sequence of measure move lower on the larger time frame. So there is the potential for this market still to go into 122. That's something that we cannot a scenario we cannot eliminate. At the moment, the market in the last few weeks has tested after that spike higher, has tested the 50% level 110.88. That's still in play. We also have participation of shorts in the other direction here. So the moment this market is actually bouncing between 110 and 130, 114 basically. So if this level is tested and is tested successfully, we have the possibility to go back to 114 here. Notice that on the daily we can also see the participation of markets at this level 112.80 here, which has the potential to push price lower. I still believe that 110 could actually bounce again this market, but we have shorts in place as well. S&P500, we have seen the market bouncing right at that level that I've indicated. And by the way, you can review the webinar I had on FX Street on July the 21st, in which I showed you in advance how you could capture this bounce here. Okay, so if you are interested, you can watch that video. And that video is right here. If you go on my page, you can check the plunge protection team here. The presentation I gave on July 21st, the plunge protection team and the coming US stock market crash, that before we had those 3 scary weeks in August, end of August. And I gave in this presentation, I gave the anchor and the information to trace the measure move that actually got in play in the markets and basically saved the market. So the plunge protection team came in again and saved the market again. So let's look at what's going on at the moment in this market. So this measure move here that you see here, which was traced from the previous highs that we were using before, And I'm going to show this again here from highs to previous highs. We captured this area here, and then to new highs we captured the new area of participation here. Okay, and the market went well into that area, but then it was pushed higher. Now, when getting into that area, what happens also is that, as we can see, the bears were not capable of pushing this price lower. When we look at this level here, we can see that the market initially responded to that area, but then the market was pushed higher and pierced the 61.8% level here, which is this 2004. So this is an important development, because although this market is moving actually at the moment is moving actually laterally here, the longs are still in control. They're in control on the weekly time frame. They're in control on the daily time frame. So this market next week could actually continue higher from the current levels here, because we have an area of participation. Or if it goes lower, I anticipate a successful retest of this 1866 level. So that's what we need to keep in mind. The dollar index is actually still observing that extension long. We identified this level well before the fact when we were looking at these highs here. I mentioned the highs to highs from previous highs here to new highs, and we knew that with how many weeks in advance? Few weeks in advance. That's very common in my method. So after tracing that level, you can see that this area has been respected a number of times. The market printed lower lows, but it has actually tested this level a number of times, and it has retested it recently as well, 2 weeks ago, and is moving higher. So at the moment, bulls are in control on the weekly time frame for this market, and bears are slowly losing the way here. And we had the bulls basically pushing this price higher and breaking the back to the bears, which are not capable of actually defending this area. So as we can see here, this market dipped down below 94.27, but is still being retested successfully. So this would actually suggest that this market actually continues higher or laterally here. If it continues higher, the euro would, for the euro, that would mean a continuation lower. We will see what happens in the coming weeks. Moving to gold. Gold has been moving down, as we know, and very technical market actually. We can see that when we trace from the high we had in August last year to lows, there was participation in this area, and then the market actually is continuing lower into that area of first target, which is here at 1061. So there's nothing that suggests that this market is going to reverse at the moment. When we look at the most recent price here, we can see that there was participation and twice in this area, the 1228 level, which is quite an important level. This is also the start of the larger weekly area of potential support here. So we are within an area of potential support in this market, but this market keeps moving lower. And participation at 1228 brought price into 1107 in the past weeks. So this market has not continued lower, and it could, and it has traded the next measure move, as we all know. And this is 1157, so it's being retested, has been retested last week, and we can see from last week price action that that level has been retested, 1156, and there is the potential for this market to continue lower. That's a second test. We still don't know how that is going to play out. A confirmation on the daily time frame of that resistance will come if price actually breaks the 1134 on a smaller time frame. Of course, that confirmation comes before, and it came already on the 15 minutes here. If you apply the fib stalking timing technique as a procedural way to time these levels, and gets you free risk trade, which is very, very important to manage risk. Next, and very similar, is the situation for silver. I follow silver closely. I'm interested in silver, and actually we saw in the past weeks, is the daily chart. So in the past week we saw participation at this 1848, which has actually targets well below current price in the 1248 area here, and that's 1250 area here, and that's why we could see this market if continues lower. Now on a smaller time frame here, or basically on the daily time frame. So when we change to the daily time frame, we saw participation at this level, and then the market continued lower, and recently we had participation in this area, which did not come from the highs here, but it came from lower levels. So this market is in a way is extended. So the participation came at this 1585, and this also has targets below. So at the moment this market is moving laterally below this 1585. So although this market is moving higher at the moment, there is the possibility for this level to be retested again, and a positive retest of this level. As you can see, when we trace from the lows to highs, there was a participation around this 1470, which is a first target right at those highs, and that's where we could see this market moving through. So this week I'll actually split the videos in 3 different videos to not make them too long for you. So stay tuned. I'm gonna have 1 or 2 more videos, and I'm gonna review the other remaining of the 13 markets I follow. Thank you very much for following, and I also want to tell you that I'm renewing my website here, renovating it. So soon you'll get a lot of information, free courses, free newsletter, free ebooks, yeah, and a lot of videos you can download to learn my method as well. So thank you very much, and have a great evening, a great weekend, and I'll see you at the other video. Bye bye now. Thanks for watching.